Joining me at the gold mining booth is Marin Katusa, founder of Katusa Research and one of my KC cousins, I guess.
Yeah.
It's taken a long time for us to do this, but I'm glad it's happening now. How you doing?
Good.
I know you're a large shareholder in gold mining.
Yeah.
Do you watch a lot of the macro action? Because when you talk about this type of project where the price moves, you win big.
Yeah.
Macro's got to play a huge role in that, right?
So definitely it does, especially with a Trump administration.
Yeah.
It's an hourly tweet thing. But when you look at it on a macro perspective, and a lot of this I discussed in my book, look, for example, what happened today with just the Americans shooting down the drone and the Iranian drone in the Strait of Hormuz. Boom, gold moves $20-25. But even if you think further back, say 5 or 6 years ago, if you actually opened up a newspaper and saw what's going on globally in a macro perspective, instinctively you would think gold should be a lot higher. And then if you actually just take any inflation rate, whichever one you want to use from whichever year, gold should be on an inflation adjusted rate anywhere between 24 to 2,700 per ounce. Then you look at the average grade of what's going on. You look at the nationalization, the increasing cost to go underground. Look at, all these projects are getting more expensive, the capex. You want to kind of play a low risk where other people have spent hundreds of millions of dollars or billions of dollars on an asset, and because of the bear market comes in, you can accumulate these assets, and it's a proven concept. Whether Ross Beatty has done it, Robert Friedland, the namesake of your company, Eric Sprott's a master on that. So that's a great strategy and a low risk way to play the gold sector.
So the founder of this company is an old buddy of yours, I guess. So that's a natural fit, but he also fits sort of the strategy and the vision you have about funding the next generation. Right?
Correct.
So here's one of those people.
So that's actually what united Rick Rule and I almost over a decade ago. I spent so much time on the road getting to know guys like Lucas Lundin, Ross Beatty, Friedland, you name it, all these guys. But there's one problem with those guys. They're so successful that they carry a premium to their name. They actually, at that time, they did. Okay. And so the theory that Rick and I and Doug, and we all invested a lot of money, was to go after the next generation of superstars. So Amir's definitely there. You look at guys like Nolan Watson. There's so many guys that Ivan Bebic that we have put millions of dollars behind to kind of support in this tough market. And then the beauty of these volatile markets is guys like Ross Beatty actually became at a discount also. So our fund transitioned to not just funding the next generation of superstars, but it was also going back and getting a guy like Ross Beatty, which we did a major deal and we're a major investor in his gold deal, where it's trading at less than half NAV. Like that's never happened in 20 years of Ross's, in the last 30 years of his history, that you could buy Ross de-risked, funded, producing at half NAV. We did that on Altera, where we became the second largest shareholder. And in his gold company, that's the market we're in now. So even though gold is moved, we haven't yet seen the equities move at the same rate.
That's like an interesting point. So if you forget this for a second, look at just equity markets, you look at the superstars in those markets, everyone knows who they are, but you can't invest in them with them if you're just an average guy.
Yeah.
Right? The Buffetts and these guys, they won't take your money. So in that game too, it's about finding the next guy, right?
Yeah.
So how do you find the next guy? What do you look for?
It takes a lot of time, a lot of effort. It's a relationship based, and you look at what's their track record. Whether it's I published my whole, the next generation of superstars, and all of them had struggles. All of them have made mistakes. No different than Rick's generation or Doug's generation. Right. Ross's track record's not perfect, nor is Friedland's. They've got a lot of mistakes, but the difference is they own up to them, they recognize them, and they never walk away. Like if you look at a Lundin company, they have never ever left an asset or a corporation stranded. They always fix it for the shareholders. It takes time, but if you look at, for example, even the success before Africa Oil, that was kind of a failed company. Then they connected. Rick and I actually financed them in early 2009 when I brought the 10BB block to Lucas, and that became the largest onshore oil discovery in 20 years. That's a world-class discovery because they never give up.
It's interesting. So like some projects are just failed projects though, right? I mean, failure is a necessity. So what do you mean by that? What do you mean by they fix it? How do you fix something that's ill-conceived?
For example, let's use Ross as a great example here. Magma Energy. Magma Energy was trading at equivalent of $25 per share in early 2000, let's say mid 2009. You know, Obama was elected. There was the green dream was going on, and they bought this little small dinky asset called Soda Lake. I was there actually before Ross bought it. And I was like, wow, that's his first move. But anyways, they drilled so many wells, just like Ram Power did the same, and they were duds. But this was like not like Ram Power, Hezi Ram, the super successful guy with Ormat, started his company, and you see that, wow, this is a tough business. It didn't quite work out. And the stock went from $25 to about $3.
Okay.
I think we can both agree that that didn't quite work out as planned. But he never gave up. And then the irony of this is Ross put up another $150 million to make it work. He stuck with it. And then he went and acquired new assets. So then he went with Iceland, and then he did the Orca Power there. So you look at, whereas most people would have just crumbled and try to merge it away with something else and just kind of move on, he didn't walk away, and he refinanced it, restructured it, merged it with Plutonic Power. They had the big BC power assets, and then he shifted to wind power. And that's a perfect example of not walking away. Then he sold it to Intergex about a year and a half ago for $8.25 a share, dividend paying, and now Intergex is in a great position for shareholders, and it's $14 and change.
So you're not sweeping it under the rug.
Never,
So
and that's the difference between like what I call the good guys that you want to invest with, and the majority of these guys who will pivot from, oh, gold's hot, we're a gold company now.
Right.
Cannabis is hot, let's do cannabis.
Right.
Our market, stay away from the rounders, I call them. They are always hanging around.
What about recognizing something is ill-conceived early, getting that money back to shareholders before a lot of, like we said, what do you say, 25 to 3? What if it was 25 to 15 and you recognized there was a problem and just shut it down?
But you shut it down in what way? Like that's a problem. In the Altera example, you can't just shut it down and give people monies back because it's invested in the assets. So you can do it. But you know, here's a great example of like a visionary. A lot of people don't know this story. It was the namesake of your company. They had 4 owners on an asset, the Crocodile, the Fosterville asset. And when a friend of mine, Doug Forrester, came by, the first meeting he ever had when he took over the new market to take over Crocodile was in my office in Vancouver. And you're sitting there, you're going, this has failed 4 times with 4 other owners. I'm like, they're not all dumb. Like, what was it? And then when you listen to Doug Forrester's plan, he had a very specific plan. And I went, wow, the other guys didn't do that. So we became major backers of him at that point at about $1. It was the first piece I ever published at Katusa Research. And here's the beauty of these like really smart guys in the sector. Ross Beatty was in on that. The guys who really got it, they all piled in heavy. But it was really Eric Sprott who came in a huge way at that point into Newmarket. He was also in Kirkland Lake as the chairman. He kind of put them together. And here's the interesting thing. So I left at about $7.50 a share. It was a great win. We got back in and got out again. But Eric became the largest shareholder of it and never sold a single share until he rode it all the way to $50. Now, how many people do you know can make a run like that, a 50-bagger, and not sell a single share? It's actually not prudent if you're a money manager, but it's his money. Talk about like testicular fortitude
he came
and
to the
vision.
Sprott conference, was it 4 years ago, I think, the last time he did a talk? And he said, I remember this distinctly, he said, my view on risk is I made a lot of money when I was younger, so I don't worry about risk. And so he can pull stuff like that off. It's just amazing. You have the stomach for it, and it's. I appreciated his honesty. It's like, I'm not worried about risk. I'm sure he welcomes it, right? He likes.
It's
risk.
Also his advantage, right? Because he's not managing other people's money, and he doesn't have to meet that quarterly threshold, and he doesn't have to deal with redemptions. The biggest problem in our sector is so many fund managers were rushing to, meet their numbers. And when that domino effect and the trigger effect, the negative trigger effect of share prices happen, and then the death spiral of redemptions, there's nothing these fund managers could do. You can't even blame them that they ended up having to sell their favorite positions.
Right. Yeah, that's the problem. All right, so we got Vancouver coming up.
Yep.
I know people are really looking forward to you talk. One of the things I like about you, the great speakers, you never know what they're going to say. And so I always try to get it out. I tried to get it out of me, and you wouldn't give me anything. I know you're not going to give me anything, but I know it's going to be good. Last year, you and Rick had an exchange on the floor, which I thought was very entertaining. So The bar is high, pal.
Again.
Yeah, the bar is high, but looking forward to it.
It's a great conference. You know, you get guys like Rick and Doug and Friedland and Ross Beatty walking the floor. For everybody there, this isn't like where you go and you just get to see the guys on stage. They're there at the show.
Yeah.
They're having a coffee, a glass of wine at the end. These are the beauty of our sector is it truly is so small.
Right.
And you get to meet the who's who in the zoo by just showing up.
Yeah, and they love the interaction. Sometimes, like, if I'm emceeing, I'm trying to get the show moving, and they want to take more questions and more questions. You do that too. You take a lot of questions. There's a lot of interaction.
And it's also fun because these people are flying from everywhere in the world, and the questions sometimes challenge you, right? And it's exciting and it's provocative, especially when it's someone like Rick and I who have a long history together, and it's fun. We got great respect for one another. But you know, he's a Golden Glove boxer. But you know, I come from the Balkans. We like to fight a bit too. So
it was good. It was very good. I'm looking forward to it.
Excellent.
Thanks for your time, Marin.
Oh, it's a pleasure.
Yeah.